Let's start with the Fed. We did hear from the Fed today. We have a new statement of economic projections. What did you make about what we heard from Jay Powell, the chair, about where we are?
I thought broadly it was in line with expectations. Broadly it was reasonable. I think the tilt to being worried about inflation was correct. I still think the Fed is considerably too optimistic. It's possible that we will have the proverbial soft landing, but I think the risks that inflation will be worse than what they say are very real. You've got the UAW strike. You've got oil prices having spiked. You've got a budget deficit that this year will approach 8% of GDP if you take out the student loan accounting item. And you've got a variety of technicals like in health insurance that are getting ready to kick in. So I think you've got real concerns on the inflation side. And at the same time, you've got concerns on the other side that the consumer, since Labor Day, it's not much time yet, but looks like the consumer is slowing a bit. Delinquencies are starting to rise. There's some wall of maturities that's going to come due over the next year. So it's certainly possible that it will work out as the Fed has it, with inflation getting back to 2, with only negligible increases in unemployment. But that strikes me as more of a goal than a forecast. So I think we've still got very real risks to the soft landing scenario, both from the no landing, continued inflation, the Fed's going to have to raise rates more than it now expects side, and from the fact that every recession that we've had for a generation, people have been talking soft landing right before it, and they've turned out to be wrong. So I think that people are just a little too optimistic right now, and I think the Fed's caught into that optimism. And, you know, on the one hand, things won't be any better than you aspire for them to be. On the other hand, it's a good idea to under-forecast and overperform. So it's a very difficult balance that the Fed has to walk. But my suspicion is that it's more likely than not that they're either going to get surprised on the higher inflation side or on the weaker output downturn side, or possibly both could materialize in a stagflationary kind of dynamic.
Larry, you mentioned the UAW strike that is ongoing as we speak here, and the risk for the upside on inflation there coming out of that. What do you make of where we are right now in that? Because my point of view looking at it is I'm not sure where these parties can come to yes between the two of them. They seem to be almost really opposed to one another on some very basic things.
Look, it's always easier to compromise on numbers than it is, like, you know, how big is the wage increase going to be, than it is on principles, like what's going to happen to the battery factories. It's easier to compromise on numbers, like the size of pension packages, than it is on questions like changing the separate wage structure for recently hired workers. So they've still got questions of principle as well as questions of numbers separating them. So this may go on for a while. And I think there are two big questions. One is, what will the spillover be to the larger economy and to the Midwestern economy, including through price increases if cars get scarce, and what that means for automobile and used car prices. I also think there's some real questions here about when you have these highly publicized labor conflicts and you see what's likely to be a big number for the wage increase. I suspect that's going to give a lot of workers in a lot of places some pretty big ideas, and that may be a source of wage pressure as well, which complicates the issues around inflation. So this is a very difficult thing to manage, and I suspect it's going to be one of those things that will be with us for quite a while.
Well, you raise a really important, profound point here. Is it possible we're looking at something more than a couple of labor disputes, so into more of a fundamental shift in the power between capital on the one hand and labor on the other? Because we've had this with the ports in Los Angeles, we had it with UPS, we've got the Writers Guild out, there are a lot of other ones. And as you know, Larry, there has been a shift in the past, really away from labor and the power of labor. You've even talked about the importance of organized labor.
I think that's the question. I mean, I think there's no question in my mind that a lot about what's happened in the economy over the last several decades can be explained by changes in labor power. I think that's contributed substantially to increased inequality. I think that's contributed substantially to rising wage differentials between industries. I think it's probably been a contributor to the flexibility that's allowed the normal rate of unemployment to come down as well. So it's been a two-edged thing, and we may be looking at things go in the opposite direction.
Larry, you have been outspoken on this program and elsewhere about the plight of Ukraine and what the United States and the West should be doing, particularly when it comes to some of the Russian government assets, not private, but government assets. We've had President Zelensky, of course, at the UN in New York this week, then going on to Washington. Where are you right now on what can and should be done with respect to perhaps reparations for Ukraine?
I would just say this. It does little good to win wars if you don't win the peace. The peace in Ukraine can't be won without a viable economy that's able to look to Europe. That's got a price tag that's measured in the hundreds of billions of dollars. There are enormous global needs that are already unmet for climate change, for pandemic, for Africa. It's a very difficult budgetary time in the United States and other major economies. What those facts say to me is that we're not going to find hundreds of billions of dollars for Ukraine in our budgets, and that if we find a lot of money, it's going to be enormously expensive money in terms of what it means politically and in terms of what it means for the rest of the world. And there's a place we can go for those resources. We can go to the assets of the Russian state that have already been seized and frozen and made unavailable to the Russian state. So it's practically necessary, morally right, and legally entirely legitimate. And I hope that President Zelensky will push President Biden on the issue. I hope that President Biden will push his lawyers. He's had pretty flexible lawyers when it's come to matters like student debt relief, when it's come to matters involving environmental protection. It would take a lot less flexibility to free up resources here and in Europe for Ukraine at a critically important time. And by doing it, we would also make it possible for the world to have a much more robust climate change, global poverty effort going forward.